All right, welcome guys. Today we have a very exciting videos to share with you. We are during the FOMC meeting, so as you can see here, it's happening right now. So here we have Steve and Patrick that are going to show you how professional traders prepare for such events, and we're going to go into like some market analysis and potentially some live examples. Before we start and before I introduce you to the team, let's go over the risk disclaimer for a few seconds. All right, now I'll introduce you guys to Patrick and Steve. So I'll let you guys introduce yourself, but Patrick and Steve run our futures trading room, and they provide our premium user with valuable content on a daily basis, as well as levels that they look at for the day.
Yeah. Perfect. Yeah, thanks, Fabio. Yeah, I'll go first. Yeah, name is Steve. Been trading, investing for about 12 years now. And about professionally close to 3 years full time. Main source of income. So of course, once I started trading, my mindset, my psychology was elevated to a point where I never put myself in danger at any day, even across the week and across the month. So just kept it simple and easy. And of course, now with Patrick and I teaming up with Fabio, we were definitely able to gain an edge where how we look at the market, how we look at institutional exposure, and how they're positioning. So, of course, our style of trading hasn't changed much, but it's more so now looking where are good areas to take profit and start playing defense and kind of reconsidering our positions. So it's definitely helped greatly what Fabio was able to provide for us. So yeah, we're happy to be here. Go live on FOMC, and yeah, thanks again, Fabio.
Yeah, welcome everybody. Thank you for joining. Thank you for watching this video. I'm really excited to share some insights with you how we prepare ourselves for FOMC, especially when we have now in few seconds the press conference. My name is Patrick Peterson. Many people know me from the Chat with Traders episode 260. I'm trading more than 18 years professional, most of the time for investors only. And also I'm running now a hedge fund. And I'm also hosting inside in the MenthorQ room, the blind spots and also the futures room. Yeah. So again, thank you, Fabio, for let us know here.
Thank you guys for obviously bringing the value that you have done so far. I think we've created some really interesting products since you guys joined, some new ideas. The members are growing, and also like members are now interacting with each other. So and sharing some ideas that you guys have given them, and they're starting seeing great results. So thank you again for all that you're doing. And so this is going to be very interesting. So as we can see, we are seeing live what's going on. It's about 2:33 Eastern time. The Fed conference is happening right now. So let's see what happens, and let's see how you guys prepare for days like this.
Yeah, so let me start first, Fabio. Let me know if you see my my screen.
Yes.
Okay, perfect. So the first thing what I'm doing every time is building a roadmap. What is the roadmap? The roadmap is having an idea where we are now at the moment. So if you're looking to the NQ, what we can see, it's the typical classical FOMC reserve before we get the press conference. So we see we have the clear reserve. We have here the top. So what we're seeing that we break out here. But if we're looking to the MenthorQ levels, we see exactly that we're now on the core resistance, what's reacting when we're looking back as strong resistance. And also we have always side by side, especially me and most of the time also Steve, the wicks. And we can see that we at the moment, and this is really interesting, we below the 1 day expected move minimum. And this reacts at the moment as the same resistance as the call resistance. So what we want to see is that we break maybe the core resistance, or we break the 1-day expected move minimum, so that we get some crazy volatility, that we get the crazy moves. But I'm 100% sure that we get this. So when Jerome Powell is speaking and he came to the stage, then we have to know two buzzwords, and this is most of the time happening in the last few FOMC meetings. So the buzzwords was always when he say inflation and when he speak about the labor market, and especially when we get the questions and we see the buzzwords labor market and also inflation, we can see crazy spikes. But most of the time, what we do, especially as professional trader, I'm looking and waiting for the great moves. I'm thinking we get two moves. We get a clear down move, we get a clear up move, and at the end, we get a clear direction. So this is what I'm calling the FOMC after move. So, and this is something where we can take advantage of. So especially when the FOMC meeting is done, then we should have a clear direction. What do you think, Steve?
Yeah, 100%. Most of the time, we have like the three major moves. Obviously, today on the interest rate decision, we didn't have much volatility. This was probably due to CPI, inflation rate, opening up earlier today. You don't get this too often where you get CPI inflation same day as FOMC. So yeah, we had a small reaction right on the decision. Decision was, of course, as expected. They kept the rates the same. So we had a low down move, about 1/3%, not too much. But like Patrick say, yeah, we're just waiting for the major moves, the major reactions. We haven't gotten it just yet, which is surprising because, Jay Powell is speaking right now. So the volatility hasn't kicked in just yet. But remember, like past performance, every major indicator of future results, every FOMC is going to be a little different. It's always going to be the same, especially when we had such a strong volatile event pre-market. Pre-market S&P went up about a full percent all the way until the strongest gamma exposure that we had at the 5,450 level, again presented by MenthorQ. So the GEX1 level right here. So I mapped up the strongest exposed areas and where we were kind of consolidating in between pre-FOMC and pre-J Powell. So I'm watching these key levels right now, the 5,420 and the 5,450, and just kind of waiting for those zones to get hit and just waiting for a reaction. So right now for me, I'm being patient, same as Patrick. So yeah, let's go.
And I have a question for you guys. So like, what becomes a trigger point for you when you look at this chart? Like, how would you decide when to take action?
Okay, let me go first. So for me, what I really like to see is that we going to the reaction what we have from the press release. So we see this is the press release candle, and we see clearly the top and we see clearly the low. And for me, it's really interesting if we can touch the low again, because this was some area where the buyers came into back again. And this is some area where I want to see that we maybe get up move again, or that we break this. But if we break this, I think we have here crazy resistance. So for this reason, more patience for the downside. I think if we touch this, we can make a nice decision based on location, based on risk management, and based on timing, what looks for our trading style at best. Is this the short or is this the long? But I think in this area, it could be really nice. And also, if we came now on the 548, can we break this? Yes or not? If we can break this, I think X14 can be the next stop. This will be 19,600. But we should be always have a second confirmation. The second confirmation could be the SPY. Looking to the S&P ETF, where we are now, we are crazy in the middle. We are in the no man's land in the S&P. I don't like it at the moment, but for this reason, I put on my Fibonacci, and then I can say now we are on the 0.5 level on the Fibonacci. It can become really interesting if we can hold the 0.5. If you be on the RIX, what is doing with the RIX? Can we break down, break we out? So this is one thing what I will be looking now and make my decisions. But as I say, this is my area where I'm looking for, and this is my area. And based on the Fibonacci on the S&P, we are now at the moment on a great area But for me, it's more about the VIX, how the VIX is reacting.
And I think, Patrick, if I can ask, a couple of, like a few days ago, you wrote something very interesting in the futures chat about timing and location, right?
Yes.
Would you be able to like explain this? Because I think that's a very important concept for anyone who is looking to take a trade, because sometimes most of the mistakes are done because we are chasing the wrong direction, right? So I think those three principles that you highlighted are very key for everyone to know.
Yeah. I share with all people who are under the mentorship or who are in the MenthorQ community 3 rules, and this is basic on my experience. So we should ask us 3 questions before we go into any trade. First, is this the setup what we really like? Is the setup what we really like our A+ setup where we make the most profit with? If yes, it's good. If not, don't take it. The second question is, it's all about the timing. Have we now the perfect timing to go into the trade? We have now FOMC, we have the volatility, we can have crazy pullbacks, we can have crazy spikes. Do you like this? If yes, then this is the perfect timing for you. If you be more a secure trader, then the timing is not really good for you. And the second, and this is the second thing, timing. And if you came to the last point, this is the third point, this is the location. What I mean with location, because this is the most important thing, find for your setup and for your timing the right location where you have a great risk reward. It makes no sense to go in a trade where we in the range or where we taking big risks to make big profits. It makes no sense. The ideal setup for me, if you trade the NQ, is maybe risk 10 points and make 50 points or 100 points. Or if you risk 5 points, make 30 points, so that you have a risk reward easily from 1 to 3 or 1 to 5, or you can take the momentum out. This is location. So again, let's repeat this. Number 1 is your setup. Is the setup good? Yes, perfect. Is the timing good? Yes, perfect. Is the location good based for risk reward? Perfect. Then you can take the trade. If you answer one of the simple 3 questions with no, then don't take the trade. And if you're taking a loss and you make a journaling and then ask again the 3 questions: setup, timing, location. And I'm 100% sure if you take the loss and you will really honest to you find a no in one of the 3 questions, and then you can quality journaling.
That's awesome. Yeah, I don't know if you want to add anything, Steve, from your experience, but
yeah, like from my experience with the timing and location, traders always say, how do I get around that to be more precise? And one way to do it is just to set alerts. But before having the levels or before having like institution data, they have no idea where to set alerts, because of course, like a past candlestick, whether it's on the 1 hour, 4 hour, sure, it was strong maybe yesterday or a few hours ago, doesn't mean it's going to be strong if it touches now. So one way to do it is to combine your levels with maybe previous price action, set an alert of that area, and then once the alert comes off, then look at the overall market and look at your confluences and kind of build an idea based on that. So I think that's one good way to kind of start, is to be patient. So once the alert sets off, look at the overall market, whether like S&P, whether the VIX or DXYs or confluence, see what it's doing, see where it is currently at a price point, see if it's making lower highs, lower lows, what's happening. And then I think that's a good way to have like a strong kind of prediction of what's going to happen next. Because at the end of the day, we're creating predictions, probabilistic predictions, and it's never going to be 100%. So that's the whole idea here. So right now, there's not much volatility going on. Me and Patrick are being patient. There's no trades. So we're still kind of just stuck between the range from New York Open to the New York High. We're still getting stuck between the range. I'm watching DXY. DXY is getting some strength right now. As J-Pow is speaking, he's speaking about inflation moving back to 2%, which has been on his template for a long time. He's been talking about that 2% inflation metric for a long time, but of course, we're getting some volatility right now as he's speaking about that. So it's just still waiting, as we're kind of like middle of the zone. Patrick and I, we like, especially me, like I always try and stay away from trading like midpoint of a range because that can be very dangerous. There could be a lot of chopping, consolidation. So let's see. Let's wait and see what we get. Like, what are you seeing right now, Patrick? I don't see any really different, any shift.
At the moment, it's like answer the 3 questions. Is the setup good? You say it. No, the setup's not good. We stay in the middle of the range. Is the timing good? Yeah. We like volatility. Volatility pays off every day trader. We need volatility to make profits. Maybe we get it. But at the moment, we get now a little down move, but it's not enough. What we want to see is crazy candles. Candles will go to the downside, because when we get crazy candles to the downside, then we get also possible crazy pullbacks. And this is something where we can work with. But at the moment, we stay in the range. Setup is not good. Timing is good. Location, I don't know. I don't like the location at the moment. For this reason, who knows? 1 year, no trade.
Yeah.
And can I ask you, so Patrick, clearly you are more kind of like a scalper. So you mentioned that your average kind of like time in trade is less than a minute sometimes, or maybe like a minute or 2 minutes. What about you, Steve? Like, are you using the same kind of approach, or is it different for you?
Like, it's a little different. My holding time is a bit longer than Patrick's. Of course, I can go down to the 1 minute, but I like to stay like on a higher time frame, like 5 to 10 to 15 minute. My entries are not really based on the candlesticks. I usually only analyze candlesticks once I'm live into a trade and looking at price action, like the shift of momentum, and especially when I'm trailing, once I'm in profit. But the actual shape of the candlestick never really dictates my setup or anything. So.
And another question that I have, which is going back, obviously, to how we met. We met already like a couple of months ago when I was doing an interview with you guys. And I would love to hear on how your kind of like trading has changed in terms of more like on the risk side by integrating gamma levels on top of what you're doing. So obviously you didn't change your style of trading, but I think you were able to add an additional layer of protection, if you want to call it, that can help you like better choose when to get out, also when to get in. But the most important is when you manage your risk.
Yeah.
Yeah, 1000%. So let's think about this. Now you'll see that we hang around all the freaking time on the core resistance and core resistance 0 DTE, gamma wall 0 DTE. Holy moly, this is a strong area. I personally see always the NQ and the Q levels, especially when I trade the NQ as support and resistance. But the name core resistance 0 DTE give me an idea how strong, based on the options market, is now the support and resistance area. And we know core resistance is a really strong area. And for this reason, at the moment, I will not battle on this area. As we can see, I'm a scalper. I need only 10 points, 20 points. But did I like this? What we see now? Of course not, because the pullbacks are too heavily. You can easily scalp 5 points, 10 points, but maybe you are not fast enough to take the profits, and then you get the pullback, and then no, this is not really interesting at the moment. And for this reason, of course, core resistance, it's so nice, and I love it so much. Thank you for the good service, by the way. And
thank you very much.
If you're looking to the wicks, this is much more greater, and I love it. On the wicks, we have also the gamma levels, and then we can see the 1 day expected move minimum where we hang around now. We have the GEX level, and sometimes we see when the market is open, New York Stock Exchange time, then most of the time we hang around on some gamma level, and based on the gamma level, if the gamma level is a strong level or not, we can see how we can react possible. It's like magic sometimes. Sometimes it works magic. If for yesterday, Steve, we was live trading. As you remember, yesterday, the VIX was open, I think, on the 1 day expected move max. You remember?
Yeah.
And we was wondering look how big is the VIX? What's going on? Why is the VIX so hard up? And then what was happened? We hit the 1-day expected move max. Boom! Came all the way
And that's
down.
it. Yeah.
That's it. Never fight the VIX. Have the gamma levels on your side, especially for MenthorQ. And I will say this makes the trading much easier. I will not sell something to you, but I'm a trader. And from trader to trader, it makes totally sense.
Yeah, and another thing that obviously you came up with this idea of blind spot, right? Which now everybody's talking about. And the idea essentially is very simple, right? Because the goal for you, as you mentioned in a previous meeting, is like that time is money, right? So if you spend too much time analyzing the market, then you're going to lose focus, and then you're going to lose opportunity that potentially could cost you profits, right? So the idea behind the blind spot is really integrating data coming from multiple assets into one chart so that you can actually look at only one piece of information and have everything that you need to know around correlated assets. Right? So you know what the VIX is doing, you know what the SPX is doing, or the SPY, right? Maybe can you share like maybe your thought process around this and how you use the tool?
Yeah, of course. At the moment, we have time, so we see we have no clear action on the market, so everything is good, everything is fine. So the idea behind was I'm a scalper, so no, you must know my history. I'm a scalper. For me, time is money, money is time. And I need clear focus. And as a scalper, you must be really fast to execute your trades and go out of your trades. But the issue is if you have on your monitor four charts, 5 charts open, maybe your chart is like NQ like mine, and then you have SPY, VIX, you have the magnificent 7 on the chart. It's so crazy. Then you have so many levels on your chart where you're looking for. I was thinking it would be really cool when we maybe use the VIX levels and put the VIX levels on the NQ chart so that we have possible no more watching the VIX. So that's the blind spot. So the blind spots means we're looking for high correlations where we can put on our chart. This is maybe the VIX on the NQ1 or the SPY on the NQ1 or the SPX on the NQ1 or someone from the Magnificent 7 on the NQ1. So that's especially my idea from the blind spots. But then our community was going crazy because we have so many success. You can come in our MenthorQ community and premium in the free, no matter what, you will see 100% few or many success stories about the blind spots, what is blind spot levels, whatever you call this. And then after our community goes so crazy, and I was seeing that people trading oil, someone trading Cooper, someone trading VIX, someone trading this, someone trading that. And I was thinking, holy moly, maybe I should also trade in gold. Maybe I should take a look into oil. Maybe I should take a look into Cooper. And then one day I was open every charts on my end. I have open NQ, oil, CL, gold, and then all the blind spots. And I think, holy moly, that's crazy. So many levels on the chart. That's impossible to read. Hey guys, this is impossible. And then I was thinking, and we were speaking, Fabio, together. Maybe it would be a cool idea if we find overlaps. So overlapping. So this means we're putting all high correlated stuff together when we're looking for the NQ. We're looking for all high correlated assets and map out all blind spots. And then we have a big list from all blind spots. And then we're looking for the overlappings, who are the most overlappings from based on all blind spots. And then we plot only one indicator, so the blind spots version 2 in our chart. And this is exactly what we have now on the NQ chart. We have the blind spot version 2. Here we see that it's 9 times overlapping. Here we have 16 times overlapping, and much more. We have this for NQ, we have this at the moment for S&P, we have this for CL, we have this for GZ. It's at the moment on beta test, but I can say it's amazing how the people like this, how the people work with this, and how much money they make with this. Yeah, can we say this, Fabio?
Yeah, I mean, obviously,
I think we can share this because that's real stories. This is not marketing. This is real crazy stories. And if you're not trusting us, go in our community, look what's happened in our community, see the momentum, see how we talking about the blind spots, see what crazy analyzing we're doing, see what crazy blind spots we combinating together where you never think or dream about, and then plot this on your chart, and then you get mind-blowing how this is working. It's like you cheat the market.
And I think that the key part is really not only obviously making money, but it's really adding data-driven decisions to your chart, right? Because the biggest mistake that, you know, traders make is that they put sometimes too many indicators, and then suddenly you are making wrong decisions and you're fighting the market, and you just want to like take back your losses and then keep going until you really blow up your account, right? So what we are trying to put here is really simple lines on a chart that actually have a lot of power, which is the power of options data. So knowing those, where those reaction zones are, can give you like an additional confidence. And again, you don't need to change your style of trading. You just have additional data that can help you quickly make decision and, you know, obviously manage your risk accordingly.
Yeah, and you're making a really great point. And how I'm looking for the blind spots version 2 is, and you can go to YouTube, you can watch the video. I map out, based on the blind spots version 2, some roadmap. I'm looking for zones where we can have possible some reactions, because for us traders, I think the most important thing is to find out where we have possible market shifts, where we have the most reaction, where we switch from long to short, and I think the blind spots version 2, they can help us with this really nice. And based on the experience, what I was making on when I'm talking to the other traders in our community, they're doing the same concept. They're looking for areas, not for price levels. They're looking for areas and make decisions about the areas, not on the levels, on the price levels. This is really important. It's all about the areas. So if we have, for example, on my chart here, the blind spot 9 times, here we have the blind spot 16 times. Basically, what we are doing is we're saying, okay, this is some really important area. And if we're looking into this, this is the 50%, I think, from the CPI move. So if we get the down move, I think this would be an area where we have looking for, that we came in here, maybe we make some consolidation, and then we go down again, or we go up again. But this, I think this will be in the future some nice area. Map this out, 19,354 to 19,324. Maybe in 1 day, maybe in 2 days. I don't know. Market is crazy. Maybe in 1 year. I don't know. But 100% this area will working very well in the future. But here we have also some really nice blind spots overlapping. So what we're basically doing now is, here we go. We map this out. And if we map this out, we can see in the moment where we was breaking out from this blind spot levels, this area was holding, and then boom, we going up. Make this sense, Fabio?
Yeah, absolutely. Makes total sense. And yeah, and the idea behind it is really simplifying, not having 100 lines on a chart, which is impossible to read, but really focusing on an area, which obviously will give you more flexibility and more risk management as well.
Yeah. And that's the whole idea. So I was saying this in our last trading sessions, and I think I'm telling this every day, and I will tell this now also. Please, trading is easy, champs. Trading is easy. The only one who make trading complicated is you as a trader. Most of the time, what you're doing as trader is you're doing the analyzing. You're analyzing all the stuff, crazy ones, and maybe you are the best analyst. But if the market is open, man, the market gives you the punch in the face, like Mike Tyson says. Everybody have a plan until you get the punch in the face. And you can be the best analyst until the market is open. And for this reason, champs, don't overcomplicate it. Simple stuff. Make it as simple as possible and make the decision. You are an analyst or you are a trader. If you be a trader, your only job is to execute trades and manage your risk. You can find so many good analysts outside who can give you the crazy analyst stuff. But what we give you maybe with the blind spots version 2 is we give you an tool, we give you an indicator, we give you levels where you can map out interesting zones where we have possible some reaction. And this is so crazy and this is so helpful. And again, are you an analyst or are you a trader? If you make it complicated, it's you. Trading is not complicated. The best example is meditation. Everyone is speaking about meditation. Close the eyes, but it's so hard that you don't think about something if you're not trained with this. And it's the same in the stock market, champs. We must not make it complicated. Trading is easy. Yeah.
That's good advice. So, yeah, so the market is kind of moving very choppy. So I guess not a good.
And this is the point. This is the point, champs. The market is choppy. What we were saying few minutes before, please repeat the 3 questions. Please repeat this, Fabio.
Timing, location, setup.
Boom! And we say no, and this is why we don't take any trade. Champs, this is how professional works. Yeah. Simple and easy. Come on. We don't get FOMO. We don't get in the trade. We don't let rob our profits. We don't let rob our money. We are taking trades with reason. We answer the questions. We take trades only with reason. No bullshit, only trading.
I think this is also probably one of the best lessons, right? Because everybody's waiting for this type of event, for these crazy moves, right? But these crazy moves could also bring very big risk because, if, as you said, if you have all these pullbacks, then you might lose, even if the direction that you chose is correct. So as you can see, like not reacting with emotion is very important because you don't want to, there's always going to be a new opportunity. There always are. So I think that's a good lesson. Thank you, Patrick and Steve.
And everyone want now the 100K trade. I remember someone was writing me, "Hey guys, today 100K." I don't name it. But
I only have a 1K trade right now, so I'm sorry, guys. Actually, no, 2K. I'm making 2K right now, so.
But you see it really clear. So if you're trading the NQ, it makes no sense. Of course, the VIX is breaking out now. This could be some nice signal for us to give now the market a little bit more attention, especially when Jerome Powell is done with his speech and we get also the down move from the VIX. This could be a sign. It could be. It must not be. Again, it could be. It must not be. Always, if you go into the trade, you answer the 3 questions with yes. You have also to look for a second confirmation. The second confirmation can be the VIX. The second confirmation can be live options data. The second confirmation can be time and sales. It can be whatever you want. But don't take a trade without a second confirmation. Trust me, you will lose.
Yeah.
Yeah, seems like S&P is failing below that large GEX level. Let's see. We finally got like an increase in volatility. So I took some longs here. let's wait and see. This is my ACAP account, broker, but for me, I don't like how the S&P is failing that. Yeah, S&P is failing the GEX level. Yeah.
And it was also failing to break out the daily highs. Yeah.
So not much volatility with the FOMC today. Not much volatility.
Yeah.
Not much.
Yeah, but you were saying this correctly, Steve. So the CPI was stealing us the show.
Yeah.
That's one of the reasons. So the day is done. CPI came out, crazy rocket, boom, boom, boom.
Yeah.
Now we stay in the range. No one will take risk on. So, but the good thing is we're trading always for tomorrow. So tomorrow will the next opportunity. Maybe we get not now the opportunity, but tomorrow. We're trading for tomorrow, Shams. Tomorrow we get the opportunity. If we don't get it on Friday because we cannot answer the 3 questions, again, it's about setup, timing, location. We cannot answer this with 3 yeses. Then Monday will come. Maybe it will be only 1 week, but on 1 week. But think about how professional traders think. Make your losses very small that they don't hit you, and have only a few trades, but they are so large and so high that the small losses became worthless. And that's the key, Shams.
Yeah, I don't like how DXY flipped resistance into support. So yeah, DXY is strong now. I would have preferred S&P or the ES to kind of top this level, enter some strong volume. But yeah, it seems like we're going to be range bound today. It's unexpected FOMC, but what can you do?
This is exactly what I say. Everybody have a plan until you get a punch in the face. Thank you. Everybody have a plan. I'm 100% sure. Everybody have a plan when we're trading now FOMC. Everyone is expecting a crazy moves, but we don't get it, champs.
No.
Sorry.
Yeah. This was great, guys. I think, this is probably like the most important lesson, right? Is not make money, but, save money and manage your risk.
Yeah.
So
I will add something, Fabio. I know you will come to the end. I think the most important lesson, let me add something to this, what you were saying. I'm 100% agree what you were saying. But on my personal view, the most important lesson was patience. Have patience. Don't rush into the market. Patience. If you don't see something what you really like, don't take it. Patience. The market, you don't trade the market. The market has to come to you.
Yeah.
Again, you don't trade the market. The market has to come to you. It's like a dog. You don't go to the dog. The dog should come to you, and then you give your comments. That's the same. Let the market come to you, and then execute your trades.
Now they're talking about inflation again. But yeah, like range bound FOMC. I think that's going to be the tail of the tape. Range bound FOMC. It's crazy. Like we got more volatility on the New York Open after CPI than we are at FOMC. So it is what it is. Is what it is.
Yeah.
First volume candle, first like volume push I got was like kind of at this level. And I'm just kind of targeting like a nice GEX, a nice gamma exposure on the S&P. So I'm just waiting to see if we can reach it. Once we reach this area, then I can start taking profit. Because I don't know if we could push higher. We could push much higher, but
yeah. The good thing is now it's about 3:10 New York time. So we typically start seeing also like a lot of flows coming in towards the last half an hour. So maybe you'll see some positioning coming in to prepare for tomorrow.
Yeah, just watching DXY. DXY is making a lower high right now, so still holding my long.
But attention on the VIX again. Look to the VIX at the moment. The VIX is give us a signal. So attention.
Yeah, the VIX is melting down. Yeah, the VIX is melting down. Yeah, so that's the beauty of confluences. Like for me, I have few screens, so like for me, I like to keep like the 5, the 50 minute, 1 hour, all in line. Sometimes, of course, like it's correlated whether I trade. For me, my main focus is usually trading Nasdaq or Dow Jones. Sometimes enter the S&P. Yesterday I had an S&P trade, but then by most of my charts I have on my screen are like all the strongest confluences, and I wait for that strong volatility spike in those confluences. Then I can a lot of times make that decision. In Patrick's creation, it's the blind spots. So like Patrick and I, we've been trading our strong confluences for a long time, and of course now he's created this strong indicator that the people enjoy using, because not everyone has multiple screens, so it is much easier to just have it on the one NQ screen or ES screen. So,
and Steve, why do you trade Dow Jones instead of the S&P?
For me, the Dow Jones, it's all for Dow Jones. It's all about being on the right side of the trend. And once Dow Jones, let's say I've watched Dow Jones strong enough where I can see sometimes it's like that ugly sibling where it does something much different than like the S&P and Nasdaq. And the thing with the Dow Jones is once it starts trending, it trends strongly. And a lot of times, like the thing I like about Dow Jones is I could trail it until sometimes lunchtime New York or even end of day, because if Dow Jones, like especially in the manufacturing or that sector, if the momentum, the volume is strong, especially the international market, because that's the thing with Dow Jones, a lot of international volume enters Dow Jones compared to like S&P and Nasdaq, because S&P and Nasdaq have like different rules for international volume. Dow Jones trades a little differently, so that's why you see a lot of different moves going on in Dow Jones. So once Dow Jones, like kind of the correlations come in, the DXY, I look at a lot of times the Dow Jones and the trend is strong and I'm on the right side of the trend, I can pick up a nice trade. But also Dow Jones can quickly stop me out as well, which is nice. So if I'm completely on the wrong side of the trend, I just get stopped out and I'm done with Dow Jones. I'm not holding it. So that's why it's a nice trade where the risk reward is very great comparatively to like S&P or Nasdaq, where it can kind of chop it around. So for the first hour, 30, 60 minutes, and then maybe the trend comes up later, not always in the first half an hour. It can come later on the day. Where Dow Jones, it can give you the trend right away, and if you're wrong, you're wrong, and I can easily move on to Nasdaq and S&P. So that's kind of how I look at it.
Nice.
But Fabio, I have a question for you. You asked me so many questions. Let me also allow you
let's
to
go.
ask you
Ask the boss.
Yeah. Okay, it's okay. So, what you're seeing based on your experience, the last few FOMCs on the options market, how people position himself, and now we get it. Look at this, boom, we get the breakout.
Now we get it.
As I say to you, Shams, attention to the wicks, attention. Now we get it.
Now we get it. Now we're entering the Gex zone. Yeah, so now I'm like,
I was saying this 2 times. 2 times I was saying this to you. Oh,
I'm out.
That's what I was saying.
Yeah.
We don't.
I'm out. There we go. There's the trade, Fabio. I'm out.
We don't like the pullbacks.
Yeah, I know. Once it started entering that Gex zone, I was like, yeah, that's it. I'm out. 2,500. That's good enough. Thank you very much, Fabio. I owe you, commission. No, I'm just kidding.
Okay, but let me ask my question, James. Let's go. Yeah. So, okay, what you were seeing based on the FOMC, how people position himself before and after. Is there some? Do you see something? What you see every time that there's some same stuff happen anytime, or do you see that's something unusual every time?
I mean, I think there's what we see is that there's a lot of increased activity because obviously the market is at all-time high, so people are waiting for that like strong pullback that hasn't really come, right? So looking at the increased option volume can give us an idea on what are people thinking. Are they protecting themselves, right? So for example, we have a lot of questions where the SPY has a different option chain than the SPX, right? And the answer can be sometimes that you have to look at the type of participants that are going into the option market, right? So people that are trading SPY maybe are more longer term investors, right? That are making big profits on the position, so they are probably like covering themselves because they're scared that these events could bring losses, right? And then you see a divergence on maybe the SPX, where it's more like zero DTE traders that like are trading that, or like hedge funds that are like taking bets before the meeting. So yeah, I think, overall, like that's why we monitor. That's why we're creating more models to understand, right, what is the option market telling us, and how can we prepare for these days. So, for example, having like cross-side the zero DT levels with the monthly expiration can give you like a better overview. So, for example, yesterday we were on a live with Doc, and today there was a lot of like momentum on the VIX options that are expiring today, but there's not a lot of momentum in the monthly ones. So, like, you could see that people were positioning on the VIX around this at this expiration because of the event coming, but overall the trend was still positive. So the market didn't really think that we were gonna see like a big pullback, but at the same time they were protecting themselves on the expiration today because they knew that something could have happened today. So I think just like having access to these tools is important. So that's why we have created different charts that you can use to prepare for these events, right? Understand, what's the zero DT telling you, what's the monthly expiration telling you, and what's the, 2 months in the future telling you. What are market participants doing? How are they positioning themselves?
Okay. My second question, I love your answer. Good answer.
Yeah, we don't really.
My second question, maybe it's a little bit unfair, but what's your favorite Q level and why?
So I would say the favorite ones, definitely
No, only one. Only one.
Only one, Fabio. Only one if you had to pick
Only
one.
one.
To pick one, I would say the 1 day minimum is a good one because it gives me like a good signals of a potential stretch. So especially like, I would flip that around if we were kind of like in a downtrend, right? But the market has been kind of like on an upward direction, right? So you want to see, and you want to stay in the trend of the market. So you don't want to go against that because that can be dangerous. So the 1 day minimum is a good entry point, I think, especially on like I look a lot at the QQQ, I look a lot at the SPX, and like when the price goes to that level, I have more confidence that there could be like a pullback. And sometimes the pullback is like a trend reverse to the other side. So then you get like a very strong move. So that one I would say, now that we are in a strong kind of like trend to the upside, that's a good entry point for like a continuation of the trend. If we were in the opposite side, where March 2020, for example, then you would look at the opposite direction, where you could potentially target the upper band for the outside.
Yeah, like today was a good example then, right, Patrick, with CPI, how we got the news push, and then today we just kind of been trending right above the 1 day max, and even FOMC couldn't break the 1 day max right now on the ES, on the SPY. So yeah, today was a good example on that.
And
like,
and then the way like we've been monitoring this for now over a year, and I think even if the price moves above the level, normally it's a stronger momentum. So even if you missed the bounce back, so if you were waiting for a pullback, that could also be a good sign for a potential momentum to the upside. So typically when the Nasdaq does days like today, breaks the 1 day max, and then we see like boom, strong momentum to the upside. So like it happens like very frequently where we see that kind of move. So yeah, I would say it's a very good level to monitor.
Yeah. And what is your
perfect?
What is your market outlook, Fabio? I know we are not analysts, we are traders, but what do you think? Did we can hit on the NQ the 20?
Yeah, Patrick's been looking at the 20,000 today. That's why he asked. Yeah. He's
I
crazy,
go crazy if we hit this. Come on. I go crazy. I get so hard crazy. I don't know. What do you see? What is your market outlook?
I think overall, and I'm not a macro guru or anything, but overall we are in a very strong uptrend momentum. Like we have good data coming in. We have, obviously we've seen it today where kind of like the CPI data, the FOMC. But I think the summer could be still strong. But then obviously you have to understand that we have the election coming in at the end of the year. So I think we're going to see some change there based on what is happening. So obviously there's going to be a lot of event happening. But I think overall, right now the market is pretty strong. The option data, even if we look at the net gamma exposure on the indices, is pretty strong to the upside. So I think we wrote a note the other day where the banks are forecasting a strong July. But then again, we're getting towards the election cycle, which always, it's always like good to understand what's happening there, because that could bring volatility.
Yeah.
And then obviously geopolitical plans, of course, to monitor. That's important too.
And Steve, as day traders, I would say no matter what, if long or short, we make our money. That's the beauty of day trading.
That's the beauty. Yeah, that's the beauty. Like, I get more stressful because, of course, day traded, scalped, swing trade. I did everything. Say with Patrick, I would always get more stressed when I swing traded, because I was always checking my phone, always checking at news reports, data, Fed minutes, waking up 2 a.m, seeing what's happening, getting ready for the next volatility spike. I don't know. For me, it was always much stressful. But at the same time, your entries don't have to be as precise as when you comparatively like scalp or day trade as well. So it's kind of like there's advantages, disadvantages with both, of course, and depends on everyone's lifestyle. Of course, when people are working the 9 to 5 or maybe additional job, it's much easier to swing trade comparatively to day trade. But also they need to maybe, if they could, put aside 1 or 2 hours in the day, and that's all they need really in reality to day trade. Because Patrick and I noticed, the less we trade, the more money we make, because we don't make any silly mistakes later on during lunchtime or power hour or whatnot.
One question that we get all the time, so I have like a lot of users that are, obviously we have users from different time zones, so obviously it's harder for people that maybe are in Asia or Australia, like to trade the New York market, right? How much time do you think you need to be able to kind of like not obviously make a living out of trading, but like make like returns that could make sense for the time you invest, like especially if you do the future stuff?
Oh, wait, Steve. That's a cool question. And think about, Steve, what we was talking about today when we was private. We was talking about based on our experience, what we have now, and we would go back and start trading again. What would our first lesson when we have a mentor and we could mentor our own self? What would our first lesson, Steve? What we were saying?
Wait, you go first, Patrick, because I have to think. I don't want to give you the wrong answer. I know what you're talking about, but you go first. I don't want to give the wrong answer. Yeah.
Okay. So I was saying, and we was talking about this. If I would start trading again, and I would have only a small account where I have for trading, the first thing what I would be learning is understand the gamma levels, understand the Q levels.
Oh, right. Yeah, no, I don't.
Understand how the options market works, not like the cracks and all the crazy mathematics, only the basics. And forget all the shit about trend lines, SMAs,
and indicators,
RSI, MACD. Put the shit out of all and understand first, as a new beginner trader, how this level works. And I will promise you, based on my experience, you become faster, you become more safer, and you become much easier, consistently profitable. And I don't know, it's depend on you. It's depend on your trading style. It's depend on your risk profile. But if you're doing this, the first steps, there is only, I think, I personally, what I was saying, I need only 3 months to teach you how the gamma levels and everything works. And I will do a bet on it. If you pay me $500 and you get not $500 out of the market in 3 months, and you get back my $500, what you pay me, 100%.
Yeah.
I'm so
and you know why that's the
excited
perfect answer? And do you know why Patrick is saying the perfect answer? Because Fabio's question was not based on how much money you need, but based on time. And we all have that. We all have the experience of how much time was wasted on all these indicators and the custom settings and everything. And we had no idea about the institutional levels, like Patrick was saying. So end of the day, it's all about time when it comes to a beginner trader. And too many beginner traders waste their time on nonsense. Sorry, I don't mean to say nonsense, but their beginning stages take so much time is where they give up and they don't see any progress or any like, of course you can say progress, profit, whatever you call it, but end of the day it's all about time, and not everyone has as much time as, let's say, Patrick and I did, because we started young. Some people start later in their 40s or their 50s, and their time is a lot more collapsed. But end of the day, it's all about being efficient and learning the right things at the right time, especially in the beginning. And yeah, that's sorry Patrick, no, I completely agree.
To go back, like if we look at this chart, right, this is very clear. And obviously when you guys started, maybe the option market was not as relevant as it is today. So as you can see, over the past 4 years, the option volumes has more than doubled or tripled, like what it was like 10 years ago, right? So I think, understanding really where the flow comes in and how the option can change the movement of price can now give you an edge because of this volume, right? So that's what we're trying to also teach within our membership. It's not really just adding levels on a chart, is really adding why those reaction zones are valuable. And the reason is because there's a lot of volume in the option market. Options have leverage, and market makers need to adjust their hedges to be able to provide liquidity. So I think that's key.
And to clarify, Fabio,
yeah,
I will make the bet, no matter who is listening to this, no matter what, if you be a beginner trader, if you're not consistently profitable, if you're knocking on the door, if you spend 3 months, you pay $500 US. I don't touch the $500 US. If you become not in 3 months consistently profitable, this must not be $1,000 US. I mean consistently profitable with that you make over 1 month, a green month. It could be $10 US, it could be $1,000 US, it could be $20,000 US. I don't name any value. I mean only consistently profitable, that your winning trades get more and more and your losing trades get less and less and less. This is consistently, in my point of view. If you be agree with this, we can make the deal, and I'm 100% sure. With MenthorQ, with the Q levels and the experience from me or from Steve or from our community, we're building crazy blind spots levels and all the crazy stuff, man, it's like crazy. And now look at this. What I was saying. We were saying, if you
I was taking the short, but I had to multitask here. I took the short right off the Gex. I took. I don't know if you guys saw, but I just made a quick 1,000. But yeah, you go ahead, Patrick. I took it right off the rejection, and without that Gex level, without waiting for the reaction, and of course I was waiting for the volume to kick in on Nasdaq. I took the short, and then that's where I got it. But without that Gex level or without the blind spot, we would be completely blind as to where the price is starting to shift. So yeah, sorry, Patrick, go ahead.
And this is the reason why I'm so comfortable with this. I'm very comfortable with this. And we were saying in the beginning, what I'm looking for is I'm looking that we break out from the high. We get the breakout. As a scalper, this would be a perfect trade. And now we get the completely reaction. Did I take the reaction? No. But the long, this would be exactly my setup. Why? Again, we have the 3 questions. Is the setup good? Yes, I want the breakout. Is the timing good? 100% sure. The VIX was coming down. We were saying this. The VIX must have to come down. Need a second confirmation. We have Jerome Powell who speak. We have the volatility. Volatility pays us. And then risk reward. Yes, we have a good risk reward because we trade the breakout and we can say, okay, I'm losing only 5 points on the NQ as a stop loss, and if I take the momentum from the breakout, boom, I can make 20 points, and that's it. I'm out. I have a risk reward from minimum 1 to 3, and that's perfect.
Nice. Wow, this is great.
Minimum 1 to 3. I like that.
So now we have a from Patrick and a great results from Steve. So it was a Great.
I had to multitask quickly here, but it's all good. We finally, once I saw the volatility kick in, I'm sorry, I was like, oh man, I have to take this trade. But I know Patrick dived a little deeper, but no, it's perfect. It was nice.
Yeah, normally when I be calm, I'm be in the trade, but you were seeing that Steve was calm, so this means he's in the trade.
So I was in the trade. Yeah, I was in the trade. Yeah.
That's nice.
All right, champs, and now we come back in the range. Is this now a good trade? No good trading. Hands off, patience. We trade for tomorrow.
And we trade for tomorrow because and it's end of day, and like we said before, we had CPI and whatnot yesterday. Like definitely, a lot of times then the volatility doesn't kick in until even after like Jay Powell or Jerome Powell makes a speech, and then the major move happens. And of course, what we're seeing now is the major move. So, but I think Patrick, I think your chart is frozen because on the NQ it's not. Like we completely took out the bottom. Yeah, there we go. Yeah. Now we're at the 1 day max right now on the S&P, and look where it's bouncing.
Oh, my shot was we're bouncing on the low, and this is what I'm meaning. This is what I'm meaning in the beginning. So I want to see that we bounce this, that we have possible along, or we get a possible short. But let's see what we get. Now we get this, and this is the after FOMC white, and also we have now 30 minutes before stock market close. We get now the market on close. We get the early market on close. In 20 minutes, we get the market on close full data. So then we can see also the imbalance. And also, I don't know, Fabio, but you are more an expert than me. This is now also a good point for the zero DTE play.
Well, at this time, probably like the zero DTEs would have lost a lot of value. So typically what we see for zero DTEs is towards the 3 o'clock time is still where you still have a strong theta, especially if those out of the money have gone in the money. But I think right now is almost like, unless really major events happen, like, the last 30 minutes, I don't know. It really depends on the volatility, I guess.
But no matter what, I think we was making a fantastic educationally
this was great.
Stuff. So it's like crazy.
Yeah. Steve, worked out perfectly live. Yeah.
You were able to multitask and,
And don't come to me that only wives are multitasking. We are men's also multitasking.
We also do it too, because we need to. I need to pay for all the baby expenses and in the next vacation. So yeah.
All right. So I think, guys, this was awesome. Like, we've been together for an hour, and this was great. You showed us really good example on mindset, on your experience. We saw some really interesting live trade from Steve, few minutes in and out, benefit from volatility, correlation with the VIX, like we've seen, like market outlook, and then we have your challenge, Patrick. So I think this was a great meeting. I would like to thank you, and for all the members that are seeing this, see you together tomorrow again in the room. We now have voice channel room as well, so we're going to be more active also during the day. So please come join us. But thank you guys for everything, and have a good rest of your evening.
Perfect. Thanks, Fabio.
Thank you.
Ciao.
Thank you.